Whales move markets. A single wallet moving 10,000 Bitcoin to an exchange is a signal. It means someone is about to sell. A whale moving Bitcoin off exchanges into cold storage is another signal. They're accumulating, not selling. These movements happen on a public blockchain. Anyone can see them. Most people don't look. The tools to track whale movements are free. The data is public. But 95% of retail investors make decisions based on price action and Twitter opinions instead of actual on-chain data. This video breaks down the free tools that show you exactly what whales and institutions are doing with their Bitcoin before it shows up in the price. Every Bitcoin transaction is recorded permanently on a public ledger. The blockchain. Anyone can read it. On-chain analytics means analyzing this data to understand market behavior. Who is buying? Who is selling? How much? Where it's moving? When long-term holders start selling to short-term speculators. When exchanges are accumulating or losing Bitcoin. When miners are holding or dumping. This data exists in real time. It's not opinion. It's not prediction. It's what is actually happening with real Bitcoin right now. On-chain data is intimidating. Raw blockchain data looks like gibberish. Wallet addresses are strings of random characters. Transaction IDs are meaningless without context. Most retail investors don't know where to start. So they skip it entirely. They watch price charts. They follow influencers. They react to news. Meanwhile, the on-chain data was showing accumulation before the price moved. It was showing distribution before the crash. The information was there. They just didn't look. 5 tools cover 90% of what you need, all free. Glassnode, the most comprehensive on-chain analytics platform. Free tier gives access to key metrics. Advanced metrics require subscription, but the free data is powerful. CryptoQuant, exchange flow data, miner behavior, whale alerts. Strong free tier. Into the block, simplified on-chain metrics with clear visualizations. Good for beginners. Blockchain.com Explorer, raw blockchain data. Every transaction, every wallet, every block. Etherscan, same as blockchain.com but for Ethereum. Track any wallet in real time. Exchange netflow measures how much Bitcoin is flowing into exchanges versus out of exchanges. Positive netflow, more Bitcoin flowing into exchanges. This is bearish. When people move Bitcoin to exchanges, they're usually preparing to sell. Negative net flow, more Bitcoin flowing out of exchanges. This is bullish. When people withdraw Bitcoin from exchanges to self-custody, they're not selling, they're holding long-term. Real example, in October 2020, exchange net flow went strongly negative. Bitcoin was leaving exchanges at a rapid rate. Price was around $11,000. 3 months later, Bitcoin hit $40,000. The on-chain data showed accumulation before the price moved. People watching exchange flows were positioned before the pump. Exchange reserves measure the total amount of Bitcoin held on all exchanges. When exchange reserves are falling over time, less Bitcoin is available for sale. Supply shock building. When exchange reserves are rising, more Bitcoin is available to be sold. Potential selling pressure. Exchange reserves have been declining for years as more people move to self-custody and as institutional buyers absorb available supply. Lower exchange reserves mean less liquid supply. Less liquid supply means bigger price moves when demand increases. Market value to realized value. This compares Bitcoin's current market price to the average price everyone paid for their Bitcoin. MVRV above 3. Most Bitcoin holders are sitting on significant profits. Historically, this signals market tops. People are likely to take profits. MVRV between 1 and 3. Normal bull market territory. Moderate profit taking. Price can continue higher. MVRV below 1. Most Bitcoin holders are underwater. They paid more than the current price. Historically, this signals market bottoms. People who are going to sell already sold. Remaining holders are long-term believers who won't sell at a loss. MVRV has historically identified every major Bitcoin top and bottom within a reasonable range. SOPR measures whether Bitcoin being moved is being sold at a profit or a loss. SOPR above 1, on average, Bitcoin being transacted is moving at a profit. People are taking gains. SOPR below 1, on average, Bitcoin being transacted is moving at a loss. People are panic selling or capitulating. SOPR below 1, sustained for weeks, is a classic bear market bottom signal. When people have exhausted their willingness to sell at a loss, selling pressure disappears. Bottoms form. The reset signal, when SOPR briefly dips below 1 during a bull market and then recovers, it signals a healthy correction that didn't break the bull trend. This is a buy signal many on-chain analysts watch closely. Bitcoin holders are classified by how long they've held their coins. Long-term holders, LTH, held Bitcoin for more than 155 days. These are the conviction holders, the believers. They don't sell during normal volatility. Short-term holders, STH, held for less than 155 days. These are newer buyers, often retail investors who bought during hype, more likely to panic sell during corrections. The distribution signal, when long-term holders start selling large amounts to short-term holders, it's a distribution signal. Smart money is selling to dumb money. This happened at every major Bitcoin top. LTH supply dropped sharply as they sold into retail buying frenzy. The accumulation signal, when long-term holder supply is rising, smart money is accumulating. They're not selling, they're buying more. Bullish signal. Miner behavior gives important signals. Miner reserves, when miners are holding their Bitcoin rather than selling immediately, it's bullish. They expect higher prices. When miners are selling aggressively, they may need to cover costs or they expect prices to drop. Hash rate, the total computational power securing the Bitcoin network. Rising hash rate means more miners are joining because it's profitable. Falling hash rate means miners are leaving because it's unprofitable. Hash rate tends to recover and hit new highs after every bear market. It's a long-term confidence indicator in Bitcoin's health. Large Bitcoin wallets can be tracked in real time. When a wallet holding 1,000 plus Bitcoin moves funds, it's worth paying attention. Wallet moving to exchange, potential sale incoming. Watch for selling pressure. Wallet moving from exchange. Accumulation, moving to cold storage, not selling. New large wallets appearing, potential new institutional buyer. Wallets holding over 1,000 BTC are monitored by on-chain analysts. Some of these wallets are publicly known. Exchange cold wallets, MicroStrategy, government seized Bitcoin. Others are anonymous. When anonymous large wallets start accumulating, it often precedes price moves. Whale Alert is a free service that sends real-time notifications when large crypto transactions occur. $5 million or more worth of Bitcoin moving between wallets gets flagged. You can follow them on Twitter or use their website. When you see multiple large transfers from anonymous wallets to exchanges in a short period, selling pressure may be building. When you see large transfers from exchanges to unknown wallets, accumulation may be happening. Not every whale alert is meaningful. Context matters. Is this a routine treasury movement, an exchange rebalancing, or a whale preparing to sell? Combine with other metrics for better signal, not technically on-chain but closely related. The Crypto Fear and Greed Index measures market sentiment from 0 to 100. 0 is extreme fear. 100% is extreme greed. Extreme fear historically equal to buying opportunity. When retail is panicking and selling, on-chain data often shows long-term holders accumulating at low prices. Extreme greed historically equal to warning signal. When everyone is euphoric, on-chain data often shows distribution. Long-term holders selling to excited retail buyers. The Fear and Greed Index combined with MVRV and LTH supply data gives a powerful composite picture of where we are in the cycle. Net unrealized profit and loss. NUPL measures the overall profit or loss of all Bitcoin holders as a percentage of market cap. NUPL above 0.75%, euphoria zone. Almost everyone is in significant profit, historically near market tops. NUPL between 0.5% and 0.75 belief phase, strong bull market but not overextended. NUPL between 0 and 0.5, hope and optimism, early to mid bull market. NUPL below 0, capitulation. Most holders underwater, historically near market bottoms. NUPL crossed into euphoria territory in late 2021, right before the crash. It entered capitulation territory in late 2022, right before the recovery. The indicator isn't perfect, but its track record across 4 cycles is remarkable. The ratio of Bitcoin market cap to stablecoin supply. When there are lots of stablecoins relative to Bitcoin's market cap, it means significant buying power is sitting on the sidelines ready to deploy. Low SSR is bullish, lots of ammo ready to buy. High SSR means most available capital is already deployed into crypto, less fuel for further price appreciation. In early 2023, SSR was low, huge stablecoin supply relative to Bitcoin's depressed market cap. That buying power eventually deployed, price recovered strongly. You don't need to track everything. 4 metrics give you 80% of the insight. Check weekly, exchange netflow, CryptoQuant. Are whales moving Bitcoin to or from exchanges? Check monthly MVRV ratio, Glassnode free tier. Are we near a top or bottom historically? NUPL, Glassnode. Overall market profit-loss position. LTH versus STH supply trend, Glassnode. Is smart money accumulating or distributing? Spend 30 minutes per week on these 4 metrics. You'll have better market insight than 95% of retail investors who only watch price. On-chain data is powerful but not perfect. Exchanges move Bitcoin between their own wallets constantly for internal reasons. This creates noise in exchange flow data. Large wallets can be exchange cold wallets that look like whale activity but aren't. On-chain data tells you what happened, not what will happen. It reduces uncertainty without eliminating it. The best on-chain analysts combine this data with macro analysis, technical analysis, and market structure understanding. No single indicator predicts everything. Since ETF approval, on-chain analytics has become more complex. BlackRock and Fidelity move massive amounts of Bitcoin through Coinbase custody. These movements show up as exchange flows, but they're actually institutional accumulation, not selling pressure. On-chain analysts have had to adapt their interpretations. What used to reliably signal selling pressure now sometimes signals institutional custody operations. This is why understanding context matters as much as reading the raw data. Long-term holder supply has been recovering since the 2022 bear market lows. Exchange reserves continue to decline. Institutional ETF flows are adding consistent buying pressure. MVRV is in moderate territory, suggesting we're not at extreme overvaluation. The overall picture, accumulation phase appears ongoing. Smart money is holding, not selling. Available supply on exchanges is decreasing. These conditions historically precede continued price appreciation. This is not financial advice. It's a reading of publicly available data that anyone can verify themselves. Most retail investors will never look at on-chain data. They'll keep reacting to price movements and Twitter opinions. You now know where to look and what to look for. This isn't insider information. It's public data, but the willingness to analyze it puts you ahead of the majority. The majority loses money in crypto. The minority that studies on-chain data makes better decisions. Which group do you want to be in? Comment on-chain convert if you're going to start tracking these metrics weekly, or too complicated if this felt overwhelming. If it's the second one, start with just one metric, exchange net flow on CryptoQuant. Check it once a week. Build from there. Next video, I'm explaining the difference between hot wallets and cold wallets, which one you should use for what amount, and the security setup that protects serious Bitcoin holdings. Subscribe to Unbanked. The old money had a head start. You have the internet.